Jeffrey, you are the main man. Thank you, Jeffrey. Thank you. Welcome. Welcome to Sunday Night Futures Live. Thank God I didn't get too far. Jeffrey on point right away. Not letting me get away with that. Look at all the comments here now. All right. Let's say hello to people. Franklin. I'm going to give you the forecast for next week. You already have the weekend commentary. You're probably going to have an idea of what. How's it sound now? Good. Um, you're going to have an idea of what we're going to be doing this week, and it's going to be fun. Let's see. RB, happy Sunday. Apple, sure. We could go over to Apple. Thanks, Colton. Danny, thank you. RB, thank you. Jeffrey again. Hello. How's the audio good now? Seymour Rivers. Thank you very much. Thanks again, Jeff. Trader Isaac, welcome. What's up, contrarians? Tired of the lies? Here comes some pure Americana. Love it. All right, let's get to it. All right, so we have the E-minis that are open. It looks as though they may be testing that high that I set this alert at. Yeah, it took out the higher highs here. So now we're up spot 11%. Let's see whether or not they hold it. We had triple witching on Friday, so that added a lot of volatility to the markets. But I'm not getting the warm and fuzzies about this coming week at all, given last week's price action, not just Friday's price action, but last week's price action, in particular on the triple Qs. We're going to talk about the triple Qs and XLY tonight. Okay. All right. So that's E-minis. They are opening up now, spot 12%. Sticking with equities, let's take a look at the mid caps. They are up. Nice outside reversal bar here, or bullish engulfing. Folks, if you're out there, you're new to technical analysis, 5-part video tutorial, my top 5 favorite candlestick patterns, free, linked below. So a bullish engulfing bar, looking pretty good here at the open on the mid caps. Going to the Russell 2000. We're already 5 minutes into the show. We have a new 5-minute candlestick. We are up a quarter percentage point. So out of the gate, they are warming up the market. Let's check out the NASDAQ 100. Lagging. And I'm not shocked. But to be fair, what we've done here on a 5-minute time frame anyway, and you can see that you have TTM squeezes firing off here. And we're probably going to move higher into the open tomorrow. Now, we broke out. They're doing a retest of the breakout point. Let's see whether or not this fails. I doubt it's going to. I think they press this higher. Now, moving on to yields. 10-year yield, they dropped it at the open. It's still down relative to the close on Friday, but relative to the open today, it is now higher. We're going to be talking more about yields in a moment. Let's take a look at a weekly time frame on yields. This is a continuation move up higher. I could see yields on the next charge up higher, heading up to 4.6% easily. We have a breakout. We broke out last week above the highs last seen in October. I think we press higher here. Back to a 5-minute view. Let's take a look at the dollar. I had it up here. Now it's gone. Now, the dollar is down relative to the close on Friday. So I suspect that given the price action on gold last week, we're going to pull up gold now. I suspect that gold is going to be in rally mode. It is not. It is not in rally mode. It should be. We're up relative to Friday, but we're off the highs of the session. So technically, relative to the close on Friday, gold is up, not down on the session. But it opened higher. It is now off the highs, showing us down on the session. I hate that. Let's stick with precious metals. Let's go to silver. It is also higher relative to the close on Friday. This chart's not making sense. Maybe it's a rollover, a contract here. It doesn't make sense to me why silver is showing is down right now. It is up. Let's go to energy. You know what? Before I lose it, I got to take a look at my live cattle futures. God damn. One of the greatest, pardon the, pardon the pun here. I just caught it myself, but one of the greatest bull markets in history in live cattle. Dun-dun-dun. Wow. And there's more to go. More to go. All right. That's stretching it. That was cringeworthy. All right. Back to a 5-minute chart. Cattle looking good here. I had a New York strip on Friday night. It was good. It was at a fancy schmancy restaurant where you can't get reservations at, but I was able to finagle it. Actually, not me, my daughter. And not the best cut of meat. I won't name the place because I know people there, so I don't want to embarrass them. All right, let's go to light sweet crude. Light sweet crude is down relative to the close on Friday, yet showing up because it's off the lows of the session. I want to go back to the dollar for a moment, and I want to take a look at the yen. And the yen is trading up. Let's take a quick look at the euro. Because I am somewhat perplexed about the price action. Euro is up as well. I'm perplexed about the price action of gold relative to the dollar of late. Now, let's go to crude oil prices. We are down on the session relative to the close, and we already spoke about that. But the distillates is what I'm really concerned about. And in particular, I'm concerned about, we have home heating oil. We'll take a look at that. That is not very strong, which is good for me. Let's take a look at a weekly chart. Actually, it is looking strong on a weekly time frame. It's looking very strong. Nice bull run here. I want to take a look at gasoline prices. I'm going to go to a weekly chart of gasoline in a moment. And we're going to talk about that as it relates to the consumer. If I can't find it quickly, I always forget the symbol for gasoline. Gasoline. Here we go. RBOB. Okay, so what you're looking at here on a weekly time frame, I want you to pay close attention to this. I'm going to go to a different variant of this to validate what we're seeing here. This is what you call a TTM squeeze. It's basically all it is, and I have it up here already. The Bollinger Bands in white trading inside the Keltner channels. Very, very simple, right? This in all probability is going to go higher. Very powerful chart setting up here for gasoline prices. It's been able to shrug off rising oil prices for a number of weeks now. I think that time has come to an end, and we're going to see a rally in gasoline prices. Let's take a look at agriculture, corn, very weak. Soybeans, also weak. Yet the DBA was up last week, I believe. Wheat, bullish, very bullish. I believe the DBA, which is an agriculture ETF, was up and it was up big last week. I got to take a look at the components of the DBA because there's something wrong here. The fact that you have all of these major uh, commodities that were mostly under pressure last week, yet the DBA, and these are all agriculture names, was up very strong last week. Let's go to comments. Fed funds rate. Yeah, they're not going to raise rates. We're going to talk about that in a moment. In fact, I'm glad you brought that up. I forgot to bring up the chart of CME. Okay, so we'll talk about this in a moment. Before we go into everything, I want to talk about TrendSpider, folks. If you are new to TrendSpider, you want to get it, you're waiting for a discount bigger than my 35%, head on over. They're having the end of summer sale, 50% off. Take advantage of it. Use the link below. Head on over. This is not going to last much longer. So take advantage of it. Don't use my discount code. Just use the link and head on over, and they'll guide you through the checkout, and you get your deep discount. All right. Let's talk about the small account for a moment. So last week we were basically flat on the week. That small account where we deposited 20,000 on August the 11th is up 6.68% or $1,355.79. So we are in a trade right now, and it is a sizable position relative to the size of the portfolio. It is an iron condor on Meta. Now, we were down more significantly on this trade on Thursday night, but that pullback in Meta gave us a lot more breathing room on Friday afternoon. So this trade this is an iron condor. So I only like to hold iron condors to 25% profitability. Once it's 25%, we close it out, we reestablish in a new position. So the minute that we hit 25%, probably not going to be this week, maybe the next week, but we will be closing it out, reestablishing, and redeploying that capital. If you want to join in our private live streams for the small account club, use the 30-minute chart club below. It's going to be morphing into the small account club. If you're trading out there with tier 2 options authority, that's fine. We're trading like that. I'm not using my tier 3 naked privileges on this account. I'm using as you would tier 2. So we can buy options, we could sell spreads, but we just can't go naked in this account, which is basically what I love to do. But that's the trade that we're in right now. I may need to roll down calls tomorrow because our deltas are getting a little bit out of whack. I have a 9 delta call and a 14 delta put. That's not supposed to be. I'm more bearish on this market moving forward, given the price action. So I'm going to roll this down probably to a 14 delta or an equivalent delta wherever we open up tomorrow, and That way, we're a little bit more balanced with the portfolio because I'm not feeling good vibes about this market despite how we're opening up today. And we're going to talk about the whys behind that in a moment. Now, the CME tool, yes, for September, there's not going to be a rate hike. All right. We're going to have the Fed come out this week. There will be no rate hike, guaranteed. But when it comes down to November, odds are favoring a pause, but it's not guaranteed. This is very, very uh, much driven by headline news, economic data. So this is not solidified. We have a long way. There is no October meeting. So in November, we have a lot of time to go between now and then. But that meeting is early. It's November 1st. So I guess technically that would be a October meeting. Okay, moving on to economic data coming out this week. Last week was chock full of economic data. Monday, not much. Home builder confidence index, all about housing for Monday and Tuesday. Housing starts, building permits. Building permits are a forward-looking indicator. Wednesday, of course, we get the FOMC rate decision. Again, they're not going to raise interest rates. It's all about the press conference. My gut is that they are going to talk pause, but talk hawkishly. They're going to lead the market down the road of a pause. However, he's going to be very deliberate, data dependent, and if he's going to be talking about wages and how they need to come down, God forbid he was to say federal government stop spending. He can't do that because he's controlled. But he will talk about how you need to make less money and how your consumption is driving up interest rates and inflation. So on Thursday, we get initial jobless claims coming out. Philadelphia Fed manufacturing survey. The deficit, well, that's not going to be pretty. It never is. And it was this report back in 1987. They were so concerned about the deficit back then, it caused the Black Friday crash. It was all about the deficit, and no longer. Nobody talks about this anymore. On Friday, we get services PMI, manufacturing PMI. That's the Purchasing Managers Index. And any read above 50 is a sign of expansion. Any read below 50 is a sign of contraction. Manufacturing has been contracting for a long while now. Services on the brink of going into contraction. If it goes into contraction, you can probably expect a market sell-off. So that's the economic data coming out this week. Moving on to earnings, not much. AutoZone, I don't do much earnings trades anymore. I went back and I pulled out the data of my year-to-date results. And if you back out earnings trades, I would have been up a lot more. So I don't do earnings trades. I'll do post-earnings trades, but not earnings trades because once you put that trade in, you have no control over that trade until the market opens up the next day or later on in the morning if they report in the pre-market. So AutoZone coming out, General Mills, I wouldn't have traded General Mills anyway. FedEx, I would have traded. Darden comes out, and that's about it. FactSec, earnings season by and large is over. We're going to be talking about Q3 earnings very, very soon. Now, I always like to begin the show off with the incompetence and the corruption that is government. Chicago mayor announces plans for government-run grocery stores as real stores fleece shoplifters and high taxes that will apparently be used to copy the Soviet Union. Isn't that wonderful? As for the shoplifters, you can guess what a Chicago-run store will look like. All right, as we let's go to comments. Yeah, you're not kidding. Yellowstone pushing. I never watched that show yet. I need to. I'm a big Costner fan. Just grilled Costco ribeye steaks. Good for you. Paul, welcome. TF Hatta, SQ. Yang is a short of China. I haven't looked at that in a while. SQQQs, I own that. I may be adding more. The semis, yes. The semis are a basket case. They are looking as though they want to break down and break down really, really hard. Netflix, yes. We'll go over Netflix because Netflix to me appears to be a no brain short. That's a stock that appeared as though it was going to break out only 2 weeks ago. And now it's breaking down double top, threatening to take out prior lows. Jody, welcome. Do you think Tesla will benefit the long UAWs? Yeah, yeah, but as soon as it's done, it's gonna dissipate. You could take a look at Rivian. Uh, that stock benefited last week. I think it's the ugliest car in the world, but uh, it benefited. So I think it's not going to be long lived. The rally in those names. I think ultimately they're going to play catch up with the rest of the market. Yeah, I feel for you, man. I feel for you, and that's what they want. They want that. Okay, let's talk about the markets as we proceed into the new trading week. On Thursday night, I always say, we go over the weekly charts on Thursday nights, and I always say, listen, one trading day left to go. A lot can happen here. And I think this past Friday was probably the most clearest illustration of that because on Thursday night, when we went live, the price action on a weekly chart of the Qs was at the highs of the week. By Friday's close, we broke back down below support. To me, the Qs look like a short all day long. We have a double top, and if we break and close down below 354.71, sayonara bull market. They are going a lot lower. And as far as the semiconductor names, what goes, I mean, the Qs are down 1.77% on the week. Excuse me. Sorry. I'm looking at the dollar amount. The Qs were down 0.48% on the week. The semis were down 2.37 on the week, clearly underperforming the overall market. And to me, this looks like a double top and that we are going to break to new lower lows. The semis appear to be setting up as a short, not right away because they're leaning into the lower band of support on a daily chart. Once they rally, we're going to look to short the semis. Okay, so this is from Twitter. Currently, just 3.3% of mortgages in the U.S. are delinquent. But how are mortgage rates at 20-year high? The answer to this question is that 90% of borrowers have rates below 5%. I'm not in the camp that believes there's going to be a housing crisis. I'm just not there yet. And this is the proximate reason. Who's going to give up that mortgage? Unless, of course, those folks that took out those mortgages had too much house and they lose their jobs and whatever. And then, of course, they get thrown out. But we're not there yet. So I agree with this narrative here that while I'm a big bear on commercial real estate, residential real estate, I'm not bearish on whatsoever. I'm in a different camp than a lot of other people out there. This is why we are not in a 2008 style bubble, no doubt about it. You didn't see the taking out of adjustable rate mortgages like we did back in 2005. Nowhere near it. It will take external factors such as, like I just said, I'm just reading this for the first time, such as a spike in unemployment to spark rise in foreclosures. Most borrowers will have historically low rates and payments on a real basis. Truly a unique time. This is good stuff. So while we talk about the bad here, and we're going to go over some bad in a moment, this is actually one of the good. Unfortunately, if you're a new home buyer, it kind of prices you out of the market because you have all these low rate mortgages out there, along with the Goldman Sachs and the BlackRocks of the world going out and buying up huge amounts of real estate, so you need to pay them rent. That's their business. So let's talk a little bit about the XLY, the Consumer Discretionary Select Spider Fund. I I'm always shocked to see how strong this is. So I decided to go in and say, okay, I need to do a deeper dive on why this index is still so strong. And I should say ETF. And the reason is this: the top two holdings, nearly 50% of the fund, is Amazon and Tesla. So that's why you're seeing the XLY move up higher, because if you were just to rely upon an equal balanced portfolio and not have this a biased portfolio towards two names, I mean, take a look at McDonald's. It's the fifth largest holding, MCD. This is a basket case. This wants to go lower. Home Depot, that's beginning to roll over. Hasn't been performing. Lowe's rolling over. So I suspect that if the UAW strike ends and Tesla comes under pressure, it may even happen before the UAW strike ends, then I think that we need to short the XLY. I'm going to go over a couple of reasons of as to why in a moment. And one of those reasons is that just in personal interest payments in the US, this is personal debt that held by not the government, but by the consumer, just hit a record 506 billion in July. During the first 7 months of 2023, Americans paid a total of 3.3 trillion in personal interest. That is up a staggering 80% since 2021. Think about that. Think about that. Nearly above the entire 2022 total. The worst part, these numbers do not include interest payments on mortgages. Americans are drowning in interest. This could be the underlying problem with the housing market moving forward. If you have job losses, if you have bankruptcies, then they're forced to dilute their property, then that's a whole different problem. But therein lies great brand new opportunities. So the consumer is in bad shape here, folks. This is why we are going to be looking to short the XLY. Also, they're going to be talking a lot about inflation, of course, this week. And the expectation is that the Federal Reserve will not raise interest rates, of course, this month and in November. Okay. So we will hear a lot of squawking about the core. What they're concerned about is core inflation. Well, diesel prices have a direct impact on the core, even though it's energy. Why? Who uses diesel? Truckers. Truckers use diesel. And if they have to pass along their fuel, their hikes to manufacturers and distributors, then that's going to raise prices at the core. So this is very, very serious, and these prices are set to only go up. You have the Saudis cutting back on diesel production, Russia cutting back on diesel production. This is going up. And God forbid we were to build a new refinery here in the United States. Oil prices, again, distillate, the oil affects everything that we live with here in the United States. It affects the price of electric vehicles. If crude prices move up higher, the cost to produce an EV goes up higher as well, because you need to get the cobalt, the nickel out of the ground. What are those heavy equipment pieces use? They use diesel. They're not using EV trucks trucks and cranes. What do you call them? Excavators to get that minerals out of the ground. They're using oil. So uh, energy prices poised to move up higher here. So inflation is alive and well. Gasoline prices, we spoke about this earlier. If I could buy an ETF of gasoline, I would. If I had a futures account, I would buy the contracts right now, because what you're looking at here is another variant. We spoke about this earlier. Gasoline prices, you're looking at in the gray. Those are your Bollinger Bands. In black are your Keltner channels. This is a squeeze getting ready to happen. And last week we broke out. Think about the rally in oil prices since they hit a low back here in June. Gasoline since then rallied, but then it pulled back. It's been consolidating and is now breaking out. It's going to have to play catch up with oil prices. So what this is going to do to the consumer, which is already struggling, they're going to be going out with their credit card and they're going to be filling up their gas tank with credit cards. And what goes up? Their interest payments. Not good. 10 red flags warn of looming recession. A lot of these are ones that we talk about here all the time. This is the leading economic indicators. This is published by the Fed. Not looking good. We're a hair's breadth away from recession. These are recessionary numbers. Consumers are foregoing big ticket purchases. We're seeing that in durable goods orders. Credit cards are getting maxed out. We just spoke about that. U.S. consumers ran up their credit cards past $1 trillion mark for the first time last month, according to the Federal Reserve. Delinquencies. God damn. That's better. Delinquencies. Student loans, they're not going up because they haven't been paying them. And you can't charge off student loan debt, but they're going to need to repay these student loans soon. And we may see a spike up there. Home equity revolving line of credit, manageable. What delinquencies there are okay. Mortgage delinquencies are starting to inch up, whereas auto loan and credit card delinquencies are ripping up higher. It's begun. Corporate bonds are maturing and refinancing them will be costly. So, years ago, corporations borrowed cheap. They use that money to do whatever, build out their infrastructure, buy back stock, pay themselves bonuses, whatever. Now they need to roll over that debt. The problem is that it's going to be at much higher interest rates. Manufacturing, we talked about this earlier. We're going to get the new PMI numbers for manufacturing and services coming out this week. Manufacturing has been in recession. In fact, manufacturing has been in a decline for 10 consecutive months, as measured by the ISM. This comes out this week. Cascading crisis could tip the balance of slowing global economy. Stagflation. And this is what's going to lead us into a conversation with regards to gold in a moment. Because the price of gold and the gold mining stocks, despite the strength of the US dollar, they've held up relatively well. And the price action on gold, silver, and when I say gold, I'm talking gold, silver, and the mining stocks. So I'm just going to say gold. And the perfect petri dish for gold is a stagflationary environment. If the Federal Reserve pauses for any length of time, they don't need to cut. If they stop reducing the size of their balance sheet, that will be a rate cut. Not in headline terms, but we go over it every Thursday night when it's published, and we'll see whether or not they're continuing to roll off debt, because the government is going to be spending a record amount of capital this year. Somebody's going to need to buy those bonds. The world does not want them. The Chinese and Japanese are dumping our treasuries. Who's going to be the buyer of last resort? You guessed it. You, me, through the Federal Reserve. So if the Federal Reserve goes into accommodation mode and is the backstop for the federal government, which is what they always are, well, that's going to be a bad thing for the US dollar. The dollar will go into correction mode. The only thing keeping the dollar alive right now is not the domestic dollar. There are $2 out there. You have the euro dollar, which is basically dollars that are overseas. They're in the derivatives market. They are transacting in trade. They are, it is just, it's overseas. If that money or those dollars were ever to come home, you're going to see a crash in the US dollar like you've never seen. Right now, it's a bit too early. And those overseas dollars, the reliance upon the US dollar is still underpinning strength of the dollar. And we'll talk about in a moment a chart that I'm going to bring up, which may be a short-term indicator that the rally in the dollar may be more short-lived than what I give it credit for. So I think that we will go up to 106 on the US dollar. There is resistance up there. If the dollar does correct, you have a slowing economy, a shrinking economy, and you have inflation, which is moving up higher. That is stagflation. Perfect environment for gold to move up higher. And again, when I say gold, I mean silver, mining stocks along with gold. Now, let's skip right to it. The dollar, while down last week, it closed well off the lows. This is a W formation. This is a very powerful move up higher on the dollar, and it is a continuation rally on the dollar that one would expect were they to see this. This is a beautiful base. And it appears as though, even though we closed down last week, we are going to press up higher. That is bearish for the dollar. Excuse me, bearish for gold. But we are extended here on stochastics. I still think we press up higher. But once we hit that 106 mark, I think you're going to have a lot of overhead supply because these sellers or owners of dollars back here, they're going to want their money back. And they'll be dumping dollars into resistance. So at that point in time, and hopefully I won't be a little bit too late to enjoy the party here because we sold a lot of our gold mining stocks, NUGT, a while ago, and silver. And thank goodness that we did. We can buy it back cheaper now. But this chart is looking pretty good here on a very short-term time frame. This is a monthly chart. Let's go to a weekly chart. Really good price action last week. So the question remains in my mind, and I went over this with members on the week ahead commentary, is that if you have the semis breaking down, if you have the trip Qs breaking down, if you have the S&P 500 breaking down, all stocks moving lower, the IWM, the small caps, are already a basket case. They're measurably off their highs already. Then why wouldn't the gold stocks go down as well? Because if you see money move into the dollar out of the equity market, and that's where money will find its home, in bonds and in the dollar, why would you want to go buying gold mining stocks right now? And that's what keeps me from buying it right now, especially with the dollar looking like it wants to move up higher. But one can't ignore the fact that the gold mining stocks are looking really good. I mean, the dollar was down fractionally last week, yet the gold mining GDM, gold mining stocks index, was up nearly 4.5%. The US dollar was only down 0.08%, basically flat on the week. Yet the gold mining stocks took it and ran. As for gold, gold on the week closed up fractionally higher. No breakout yet. Higher lows and higher highs here. So I'm torn about whether or not to go back into this market. I think that what we'll be doing is looking for an opportunity to sell puts and to try to get long vis-a-vis a derivative. And if the shares are put to us, they're put to us. But that'll probably be the game plan moving forward. And the reason why we may get a pullback in the dollar a little bit more sooner than what I expected, maybe short-lived, the rally. This is a chart, a daily chart of the euro. And this is the first time in history that we've had. This is the daily chart. No, weekly chart. 9 consecutive down weeks. That has never happened before. And I suspect that once we hit uh, this $1 and 1.06 mark relative to the dollar, we're going to get a bounce off of that mark and probably a pretty strong rally in the euro. That'll send the dollar south, and that may allow for the gold mining stocks and gold to move up higher. So we're taking a wait and see approach here on getting aggressively long of gold. I suspect that we will be very, very big into gold once the yield curve begins to steepen, equities begin to decline or decline rapidly, and you'll see gold and the mining stocks probably be the phoenixes that rise out of the ashes first, along with emerging markets. Uh, Fuel tax may increase to take advantage of elevated costs. Sure. DG still dumping. Yeah, we tried to put on a trade there, but they didn't take our offer. We were selling premium there last week, but we couldn't get it filled. Uh, I'm looking forward to your talk about stagflation. Stagflation was the proximate driver of the great bull run in gold in the 70s and early 80s. That was the last great stagflationary environment, and it looks as though it's a perfect conditions for stagflation. So the charts are firming up here. The only thing that gets me is the fact that the dollar looks like it wants to move up higher. That's what you did not have in the 70s. You had yields moving up higher. A lot of people don't believe that yields can move up higher along with gold. Well, that's the case. You have the decline in the U.S. dollar means a flight to gold. So that's real money. People want to park their assets in real money. They want a store of value, which the dollar is not in a stagflationary environment. So yields can move up higher along with gold. You just can't have the dollar rising up and gold participating as well. Just doesn't work that way. All right, let's do some chart requests here. And again, folks, if you weren't here earlier, head on over to TrendSpotter. Use the link below. They're having an end of summer sale, 50% off. Take advantage of it. Let's do some chart requests. I got to go bring up the members area here. How much time do we have? 15 minutes. That's plenty. Okay. See if I have any chart requests. American Express from Andrew. And Apple, we're going to go over. Okay, good. So Apple, we already have. American Express. All right, let's get to it. We have some time here, so if you want to put in a couple of more requests, we could do that. Okay, and we have 39 folks on here tonight. Folks, if I can ask you to like, subscribe, hit that notification bell when we go live. It really helps them out with the YouTube algorithm. If you have a comment, negative or positive, just keep it professional. Leave it in the comments section, and I'll get back to you. All the news I see so far tonight, Coinbase retains $1 million windfall from Curve Finance hack. Okay. If they raise rates over in Europe, I don't think they're going to. I listened to Lagarde the other day, and the Eurozone is, if they're not in recession now, they're entering a recession. So it's not wise for them to raise interest rates. Paul, is that a chart request? Uh, Jody, did we go over Tesla currently short? No, we did not, but we can. Okay, you got it, Jody. Paul, KHC, and Cliff. Okay, let's do it. Before we go into the charts, I want to go over seasonality. I haven't done that in a while. Just to take a look at DG that's one that we're probably going to be trading this week. Let's take a look at seasonality here. Here we are in the month of September. Usually a pretty good month, but not this month. All right, so seasonality, nothing happening there. Let's bring up triple Qs. September, generally a weak month, no great shock. We're having a weak month. That changes in October. And of course, November is the best year for the Qs, to the best month for the Qs. And I believe it's the same for the spiders as well. S&P 500. Yeah, this is going back 31 years. So there's a lot of data here. September, seasonally weak. October, November, seasonally strong. Although October can be pretty volatile. But November is very, very favorable for longs. All right, let's get to it. Let's do Apple first. Let's go to a weekly view. And Apple's holding on by a very, very thin thread. I think this gets resolved to the downside. You have a double top. If we close down below the low of the week of August the 14th at 171.96, Apple's done. It's cooked. It's going a lot lower. To me, Apple's a short waiting to happen. Would I short it on Monday morning? No. I would wait for the break and I would then go look to short Apple. Do we have a short-term swing trade potential here? No, it's weak. And I think it wants to go lower. We are at support. These are the automated trend lines picking off support. You do have a volume shelf down here at 171.57. That's about where we found support back here. Yeah. So if we fail to hold this 171, let's call it 171.57, it's all over. Apple goes lower. I'm bearish on Apple. I would not get long of it. I would be selling calls, naked calls on this out of the money. And I would wait for a nasty sell-off, and I would wait to sell the put side, creating a strangle. I would not open up the puts yet. Netflix. Netflix is a basket case. Horrible, horrible price action here. We have, in fact, broken down. This is a new breakdown on Netflix. Here was your double top. And we broke and closed down below this lower low here at 399.59. We are down below it. They're going to rally this tomorrow. And I would be shorting into that rally in expectation that sellers are ultimately going to move in and sell on Netflix daily chart. Now, in a daily time frame, last week was a bloodbath. So you don't want to go shorting right away here, because what they're going to do is they're going to squeeze the shorts first. So let them squeeze the shorts, lean into the short side. That way, consult your financial advisor. And that's the way I would trade this. Let's see how they close it out in a 30-minute view. Not good. This is not a good chart. It's bad. Selling into the close. A lot of resistance immediately above here. Some or one or multiple institutions were out there dumping Netflix last week. Moving on, American Express. Do we have a squeeze here? No. All right, weekly view. A really good week last week. The financials had a very good week last week in general. The XLF names. So uh, I like this setup here. Might they pull it back and do a retest? Sure, I'd be a buyer on that pullback. Daily chart. A great sessions Thursday and Friday. We broke out of a downtrend. We're going to get a pullback here. I would be a buyer of AXP right here. No, I don't want that one. Wrong one. We'll keep some sensitivity on there. Not too much. Okay, so we're good to go here. If it doesn't come to us, we will not chase it. That's just the rule. I set these alerts and I forget them. I'm not going to obsess about the stock. So AXP looking very good. Bullish on AXP. Tesla, is it time to short? No. Right now, this UAW strike is giving Tesla a bid. Now, if they spike it up, this is a weekly chart. If they spike it up to around 284, I would be hard pressed not to begin bear operations on Tesla, especially if the triple Qs are weakening up. So at some point in time, if the triple Qs roll over, Tesla's going along with it. This is just an anomaly at this point in time. So I like Tesla, great company, but it's expensive, very, very expensive. And uh, I think that they're probably going to be doing more price cuts moving forward because there's more competition moving in. Daily chart. Yeah, again, we need to wait for a 285 mark. That would get me wanting to speculate short on Tesla. Right now, looks as though it wants to pop higher. I would short into that strength, but I want to see the Qs weakening up. If I see a divergence where Tesla's going up, Qs are going down, that's a problem. We saw that last week. Tesla closed the week out up, whereas the Qs closed it down and broke support. That's not going to last. Ultimately, it's going to be the Qs that win out. The direction of the Qs are going to win out. If the Qs recover and begin to break out again, well, then Tesla can move up higher, forget about shorting. But if Qs are moving lower, they press Tesla higher into that 285 mark, I'm shorting it. You're welcome, Jody, anytime. Tom, APLS. Okay, you got it, pal. What do we got? KHC. Staple name. Very, very poor performance of late. Not just this company, the entire sector. This is a monthly chart, a head and shoulders setup. Left shoulder, head, right shoulder. I do not like this. I think this is probably going to break. And you may be saying, wait a minute, no, money's going to move into the staple names as a safe haven. I don't think so. I think the consumer is so broke right now that they'll accept generic or the lower brand of of ketchup, the lower quality, and pay less. So that's going to hurt the profit margins. They may be producing some of that and make some money on it, but it's going to hurt their margins. So I'm not liking craft here at all. I think that this is going to break on a monthly time frame. Weekly view, we remain in a downtrend. So the path of least resistance on Kraft Heinz is to the downside. We're in a downtrend channel. So I would avoid this until such time as we break out. And there is a lot of resistance above here. Daily view. They broke it out on Thursday and then it got rejected on Friday. That's bad stuff. That's very bad stuff. That's a breakout point failure, also known as a bull trap. I suspect this gets resolved to the downside. Cliff, Cleveland Cliffs. Another head and shoulders setup. Let's get my drawings off here. An awkward head and shoulders setup. Left shoulder, head, right shoulder. And we are breaking support. This is quarterly support in dashed line. Resistance above in solid red line on a monthly chart. So a lot of pressure here. Weekly view. Big down volume last week. We're holding support. I don't think on spec that this would be a bad play to make. I'd be looking for a higher low here. And if you do get long, I would really need to stop out of this trade on a close down below the lows of Friday, which was at 1392. But you may get a pop here because, again, going back to that monthly chart, the month isn't over yet. So if they rally and close it back above this support level here, or now resistance in blue, that could be the bottom for Cleveland Cliffs. So I'm not overly bullish on it. I would want to watch this one because we may be at a bottom here on Cleveland Cliffs. APLS. This really came back, huh? Okay, it's consolidating. It's outperforming the sector as a whole. I mean, LABU last week got annihilated. So we traded sideways. We broke out last week. I'm not overly bullish on this name, but clearly there are more buyers than sellers, and they're inching it back up. You're going to have a little bit of resistance as you found on Friday, or last week, I should say, at 48.12. That's where the top of the volume shelf is here. If we get through there, you may see some traction on APLS. Yeah, we broke out on Friday. Good consolidation here. RSI is strong. I think it goes up higher. If I had to make a guess one way or the other, I think it goes up higher. Last chart up. We'll go with Tom for Penn. Does it touch 24? Yeah, I think it could touch 24 tomorrow. It's a weekly chart. A very nice reversal week last week. This is quarterly support in blue, as here. Quarterly support. This could break out. In fact, it did break out, had a breakout last week. I would be a buyer on a new weekly closing high of Penn. Daily chart. These a gnat flying around me here. Sorry. Uh, Nice breakout on Thursday. Did a retest on Friday. We may do a couple more retests here. I'd be a buyer of Penn, but just beware of the overall market. If the overall market starts to puke, then Penn's going down as well. But on any real serious pullback on Penn, take it as an opportunity. And keep in mind that the discretionary names are being propped up by two names, the XLY being held up by Amazon and Tesla. Once those names go, and Amazon began to go on Friday, you could expect that the entire complex of consumer discretionary is going to be breaking down. And these gambling stocks, well, they're a potential acquisition target, aren't they? Oh, no, no. I'm thinking about Barstool Sport. No, Penn is a potential acquisition target. So that's why you're seeing a bid here. Let's take a look at MGM. Yeah, they're not seeing a pop here. So I think this is purely a acquisition play for Penn. So it may hold up in the market sell-off. That's it, folks. Hey, folks, thanks for being here. Please like, subscribe, and don't forget about the TrendSpider 50% discount code below. Use that link. Also, join the small account club using the 30-minute chart club link below. I didn't do a session this weekend. I didn't have time. It's going to be difficult between now and the end of the quarter to get one of those done. But going into October, I plan on doing them a lot more frequently. So please, they're private live streams. Enter your email address. We hate spam too. Enter them. Have a profitable trading week and an awesome remainder of your Sunday. I'll talk to you soon. Be well.